For decades, U.S. entrepreneurs and investors have formed corporations abroad to expand internationally, protect assets, or pursue tax advantages. From IBCs in Panama to holding companies in Dubai or the British Virgin Islands, global structures have become increasingly common among small and mid sized business owners. But in 2025, many of those same business owners are facing a harsh reality. A single complex IRS form, Form 5471, is now triggering automatic $10,000 penalties, with some cases escalating to $50,000 per year, even when the company earns no income. Many didn't even know the form existed. Here's everything you need to know about Form 5471, who must file it, and how to avoid turning your offshore strategy into a tax liability. What is Form 5471? Form 5471, officially titled Information Return of U.S. Persons with Respect to Certain Foreign Corporations, is a mandatory disclosure form required by the IRS under the Internal Revenue Code Section 6038 and 6046. Its purpose is to collect financial and ownership information from U.S. persons who are officers, directors, or shareholders of foreign corporations. This includes international business companies, IBCs, foreign LLCs taxed as corporations, joint ventures, or startups incorporated abroad, passive investment companies held by Americans. It applies to both active and inactive companies, regardless of whether they generate income. Who must file Form 5471? The obligation to file Form 5471 is not based on income, but on ownership or control. You must file if you are a U.S. citizen, green card holder, or resident alien, an officer or director of a foreign corporation with substantial U.S. shareholders, a U.S. person who directly or indirectly owns 10% or more of a foreign corporation, a person who gains control more than 50% of a foreign corporation during the year, a U.S. shareholder of a controlled foreign corporation, CFC. Even if your company had no operations, no clients, and no income, the obligation to file remains if you meet the ownership thresholds. This includes holding companies, subsidiaries, family-owned entities, and crypto startups registered abroad. Indirect ownership, such as shares held through another company or trust, also counts. Why 2025 is a turning point: penalties and enforcement. The IRS has historically focused on high net worth individuals and multinational corporations, but starting in 2024 and accelerating in 2025, it's now using data analytics and international treaties to identify non-compliant offshore owners at all levels. Here's what changed in 2025. AI-driven matching systems. The IRS now cross-checks foreign bank records under FATCA CRS against 571 filings. Aggressive use of CP15 notices. Penalties are assessed automatically by computer without a prior audit. Global reporting pressure. More jurisdictions are sharing entity ownership data, even if you never report income. The penalties. The IRS imposes a $10,000 penalty per form per year for failure to file Form 5471 or for filing an incomplete or inaccurate form. If the form is still not submitted after 90 days of notice, additional penalties of $10,000 per month may apply, up to a maximum of $50,000 per return. Real-world example, 2025. A US-based entrepreneur created an IBC in Belize in 2020 used to hold foreign investments. The company was dormant in 2021-2024. In 2025, he received a CP15 notice imposing a $10,000 fine for each year, $40,000 total, despite earning no income and never moving funds. The IRS's position: the obligation is based on ownership, not activity. What does the form require? Form 5471 is not a simple checkbox form. It's a mini tax return for your foreign corporation, requiring balance sheet, foreign GAAP, or converted to US GAAP. Income statement, gross receipts, expenses, taxes paid, shareholder information, percentages, changes, transfers, foreign tax credits and E&P, earnings and profits calculations, Section 965 transition tax, GILTI, Subpart F income disclosures if applicable. Currency conversion from local currency to USD using IRS approved exchange rates. Each filer category, category 1 to 5, has different reporting requirements. Misclassifying your category could trigger an automatic fine. What if you didn't know you had to file? There are still options, but time is critical. If you haven't been contacted by the IRS yet, you may qualify for Delinquent International Information Return Submission Procedures. This allows taxpayers to submit late Form 5471s without penalty if you had reasonable cause for failing to file, you were not under IRS exam or audit, you accurately file all required forms and attachments now. The submission must include a written statement explaining the reasonable cause and a signed declaration of good faith. However, these procedures are not guaranteed, and any misstep can disqualify you. How FAS CPA and consultants can help our firm has helped dozens of clients recover from 5471 non-compliance and avoid life-changing penalties. We offer detailed entity classification and risk analysis, accurate completion of Form 5471 for all filer categories, reconstruction of foreign accounting records, filing of reasonable cause statements to request penalty relief, offshore structure reviews to reduce future compliance risks. If you own or control a foreign corporation, Form 5471 is not optional, and ignoring it can lead to massive penalties, even for small or inactive companies. In 2025, the IRS is no longer giving quiet warnings. Enforcement is real, automated, and data-driven. If you've missed filings or are unsure about your obligations, don't wait for a penalty notice to act. A consultation with FAS CPA and consultants could protect your business and your peace of mind.